Hello and welcome to Simplicity in Stocks. India's space technology is no longer just for scientists or policy experts. It's becoming a real business opportunity. Companies are now making radar systems, satellite communication tools, precision electronics, and advanced mapping technology that supports every space mission. Some small firms are even creating high-grade microwave systems for defense. Others are working on homegrown avionics. Yet others are building digital maps that the future transportation will rely on. There are also companies focusing on optics and space hardware. In this video, we will discuss 3 Spacetech stocks for your watch list. Please note that this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Astra Microwave Products. Astra Microwave Products is a designer and manufacturer of high-performance radio frequency (RF) and microwave components, modules, subsystems, and complete systems. Although the defense sector accounts for a majority of its current business, the space sector is a strategic area of expansion. The company has been involved in India's space program for about 25 years now. It supplies critical RF and microwave components and subsystems for satellites and launch vehicles, having contributed to major missions of ISRO. The company has incorporated a subsidiary, Astra Space Technologies, focused on satellite equipment, including the assembly of small satellites. It has also established satellite assembly clean rooms at its Bengaluru facility and is actively pursuing opportunities to build and launch small satellites. The management plans to launch its own revenue-accretive satellite, AstraSat-1, within the next 24 months. The intention is to generate revenue from data monetization through satellite constellations. The company had delivered a revenue growth of 12% compounded annualized growth rate, or CAGR, over a 3-year period, and a net profit CAGR of 58%. The last 3-year average return on equity (ROE) has been 14%. Looking ahead, the management is confident in achieving revenue of around 1.2 billion for FY26. The aim is to double turnover over the next 3 to 4 years. The target is to become a $1 billion revenue company in the long term. Apollo Microsystems. Apollo Microsystems, established in 1985, provides electronic, electromechanical, and engineering design solutions. The company specializes in high-performance, mission-critical systems and subsystem-level components tailored for space-qualified performance. Specifically, the company develops payload checkout systems and Earth station acquisition systems for space applications. It has supplied the first indigenous payload checkout system to ISRO, replacing legacy imported systems. The company has delivered revenue growth of 32% CAGR over a 3-year period and a net profit CAGR of 58%. The last 3-year average ROE has been 8%. The management projects that the revenue from the core business alone will grow at a CAGR of 45 to 50% over FY26 and FY27. However, due to continuous and planned capital investments and facility expansions, there could be some margin pressure in the second half of FY26 and in FY27. A big driver for margin improvement in the future will be the shift towards higher margin production projects. The management aims to convert the current revenue mix from 25 to 30% production projects to over 40 to 45% over the next 2 years. Paras Defense and Space Technologies. Paras Defense and Space Technologies is an engineering company specializing in both the defense and space sectors. It has an all-round capability in design, system engineering, manufacturing, integration, and qualification of optical systems tailored for space programs. The company's offerings include ultra-high precision optics for space imaging, large-size space mirrors for high-precision imaging in Earth observation satellites, and optical reflectors used in missile and payload assemblies. It is the only Indian private sector company to have developed hyperspectral cameras for both defense and space applications. The company has delivered revenue growth of 26% CAGR over a 3-year period and a net profit CAGR of 32%. The last 3-year average ROE has been 10%. Looking ahead, the management aims to tap into many high-value opportunities. Through its wholly owned subsidiary, Quantico Technologies, the company is developing next-generation technologies in quantum communication and quantum sensing, which could provide it a competitive advantage in space technology. These companies are not just riding the space tech wave from the sidelines. They are engineering businesses building RF systems, optics, electronics, clean rooms, satellites, and payload technologies. These companies have good order pipelines, production capacity, and clear long-term expansion plans. In highly complex sectors like space tech, it's important for investors to conduct thorough research on the fundamentals and corporate governance before making any investment decisions. Happy investing!